Are you a buyer in this current market and maybe interest rates got you a little nervous about where to go, how to get started? Well, today's a great video for you because we're going to be talking to someone that's going to help us out with those questions, and we're going to get started right now. What's up, everybody, and welcome back to All Things Knoxville with me, Ben Barreto, your local real estate pro and relocation expert for East Tennessee. Before we jump into the video, I just wanted to let you know that I make videos like this every single week, so make sure to hit the like and the subscribe button. Additionally, if you need help with any questions regarding real estate, where to go, if you need help looking for a home or selling a home, please hit me up. I'm happy to help you out. My contact information is in the description. Now, with all that said, today we are going to be talking with Norma White from CMG Financing. This is a mortgage specialist that helps me out all the time with my clients. We close a lot of deals together. She's very knowledgeable. She's been in the business for a long time. She's going to explain all that to you. But today we're going to be discussing the higher interest rates and how that affects buyers and how you can better prepare for these higher interest rates to make sure you can still qualify and buy the home of your dreams. Check out the video. There's a lot of good information. Take some notes, and I'll see you on the flip side. What's up, everybody? Ben Barreto here, the real estate pro relocation expert. I'm sitting here today with a lender, an expert in financing. In some ways, her name is Norma White, and well, I'll let her introduce herself.
Hi, Ben. Thank you for allowing me to be on your video with you. I am Norma White. I'm with CMG Financial and been in mortgage lending for about 25 years. So I am here to answer some questions that Ben has, and let's go ahead and get started with your questions.
Yeah, I thought it would be beneficial to put a video out there. I get a lot of calls from buyers from all over the country and then also here in Tennessee that have a lot of questions about lending, and a lot of times my go-to answer is contact Norma, or, and ask her, because I'm not an expert when it comes to mortgages. I'm an expert in selling houses and helping buyers find their home. So with that said, I got some questions for you. These are common questions you're seeing a lot on social media, as well as the calls I get. And the first question is with interest rates where they're at right now. What are you expecting interest rates to do in the near future?
It's a great question. I hear it all the time. And first of all, I'll say, I certainly am not an expert, but I am an everyday in the trenches mortgage lender. And so, and also CMG allows us to gather so much information and sends us so much information to keep us on top of where the market is going and what to expect on a daily basis. Mm-hmm. So to answer that question is, where are rates going to go? We'll talk about, first of all, at the end of 2021, interest rates were at 3.1%. And so the housing authorities, that's made up of the National Association of Realtors, Fannie Mae, National Association of Home Builders, Wells Fargo, National Association, or Mortgage Bankers Association, and Freddie Mac. Mm-hmm. So at the end of 2021, they said interest rates by the end of June of 2022, we would be at about 4.48%. Mm-hmm. And so that's an average of what they were all thinking. So here we are today, and today being May the 24th, rates are at 5.25%, and that is on a 30-year fixed. And so as you see, that even we couldn't predict exactly, but so where are we going? Is that, what do I expect rates to do in the near future? Well, we don't really know exactly, but it has a lot to do with how really the Fed manages the inflation.
Yeah. Well, we're midway through the second quarter, so they're not too far off as far as when they expected things to go up. We're a little bit higher than expected, but that's okay. So, I know it's hard to tell, you don't have a crystal ball, but do you have any insight on what interest rates are going to do by the end of this year or next year?
It's a great question there too. According to Freddie Mac, the average 30-year rate jumped from 3.76% to 5.11% from March the 3rd to April the 21st. That's 135 basis points, or 1.35%. So that's quite a jump, and it was just in 8 weeks. But rates could continue to rise, throughout this year, and where they'll plateau, we don't know. For next year, we think that all the experts believe that we'll plateau though in 2022, and then from there, historically, we'll ride that way for a little while, and then we'll start inching back down.
Okay.
But again, like you say, we don't have the crystal ball, and
Right.
we do not know we would have probably never guessed we would be at 5.25 today.
Right, yeah. Well, there was a time we probably never would have guessed we'd be as low as, 2% that we were
Right.
last year at some point. So, and another thing to bring up for those of you watching is this is not the highest we've seen interest rates, right? You got a little info on that?
Yeah, I love this, and I've been in this business a long, long time, and when I first got in the business, interest rates were, incredibly high, but the highest mortgage interest rates in history were October of 1981. The 30-year fixed in 1981 peaked at 18.45%. And in that same year, we saw the highest average, and that was 16.63%. So it's all relative, isn't it?
Yeah, right.
So back in 1981, when the rate did spike to 18.45%, what was the culprit? What caused that? And it was record inflation, and also by the OPEC embargo. So, hello.
Yeah, it seems like somewhat of a theme or something when it comes to this.
Yeah.
Okay. Well, I guess as far as interest rates go, who decides where the interest rates need to be?
We do not. Mortgage lenders do not set the rate.
Right.
Mortgage rates are really set by market forces, and mortgage interest rates are absolutely determined mostly by the secondary market, and this is where your mortgages are bought and sold.
So these investors come in and buy out the loan and make it part of a portfolio.
That's right. They do. They bundle the mortgages and sell them off on the secondary market.
Okay.
Also Wall Street.
Okay.
Yeah.
Interesting. I did not know that before today. So I'm learning a lot today. I hope you are too. So the other question I have, as far as interest rates go, because there are going to be people, they have no choice but to buy a house right now.
Sure.
And they have to use financing. Most people have to use financing. So as far as interest rates go, how does that impact the buyer and their ability to get financing or purchase a home?
Higher the interest rate, the higher the mortgage payment.
Okay.
So the higher the mortgage payment, the less some borrowers can buy. So smaller house, so that the interest rate offsets that payment, so they will have to buy a smaller house or at least a lesser purchase price.
Right, yeah. So either smaller house or in a more affordable area or something like that.
Exactly.
Yeah. Okay. So it kind of boils down to the whole debt to income ratio thing.
That's exactly
what
right.
you can afford to pay
That's
each month.
exactly, that is the point.
Okay.
It will affect the debt to income ratio.
Okay.
That interest rate has everything to do with that payment and debt to
Right.
income.
Okay. Excellent. And then, is there anything that a buyer can do to kind of offset or help mitigate their ability to get a higher loan when interest rates are high?
Absolutely, and these are my top 5 with one other pointer, and that is to make a larger down payment, improve your credit score, buy discount points. After you're under contract and you're ready to get locked in, I will talk to you about that, but discount points are actually paying mortgage interest off up front. And in some cases, depending on how you file your taxes and what type of business you're in, some of those, sometimes mortgage discount points can be tax deductible, so something to consider, but you can buy your rate down with discount points. Also shorten your loan term. Go from a 30-year to a 15, but keep in mind that if you go to a 15-year term, your payment will be much higher. However, your interest rate will be lower because it's shortened term. And lock in before rates go any higher. I think that is, that's probably the strongest point there, is to go ahead and just go with it.
Yeah.
Because rates probably are not going to go down anytime soon. So just go ahead and bite the bullet and get it rolling.
Yeah.
And then my other little pointer is make sure you know what your credit score is
Right.
before you get out there and start looking at houses. And we'll certainly here at CMG be able to help you with looking at your credit score. And there are many times we can help you do a rapid rescore.
Okay. Yeah. And then looking at their credit score, a lot of times you'll be able to tell them, these are the things you need to focus on and not pay off.
That's exactly right.
So,
and just paying off accounts does not equal
Right.
great credit scores. Or
Right.
closing accounts,
Yeah.
not a good idea.
I learned that the hard way. I paid off a bunch of credit card debt, closed the credit cards, and learned that was the last thing. So the last question I got is with the interest rates going up and with all this talk of volatility in the market and everything, do you see a crash coming?
Absolutely not.
Yeah.
I do not. And, I hear that a lot myself. Having been a mortgage lender, I was waist deep in mortgage lending at the time of the last crash in 08 and 09. And the whole way we lend today is a whole different world.
Mm-hmm.
It has absolutely, lending has been reformed. Mortgage lending has been reformed. We absolutely follow every single Dodd-Frank guideline. Our borrowers have the ability to repay.
And that was the main thing leading up to the 2008 crash, was people that should never have qualified for a loan were given these loans that also blew up in like 5 years. And
That's right.
it was just a recipe for disaster.
Absolutely.
And none of that's happening today.
That's absolutely correct.
So that's really all the questions I got. I really appreciate you taking time and answering these questions and helping out, the viewers with these common questions that pop up when it comes to getting financed.
It's my pleasure. Thank you so much for having me.
Yeah. And if anyone wants to reach out to you, how can they get a hold of you?
So you can email me at nwhite, that's NWHITE at cmgfi.com. And then you can also call me. My number direct is 865-898-5000. And I look forward to speaking with you and helping you and just answering any questions that you may have. And of course, get you pre-qualified so you can get out there and start looking for homes.
Exactly. I think the biggest takeaway today is if you want to get ahead of these interest rates, is to just go ahead and bite the bullet and start today. And all of that contact information will be down in the description, as well as my contact information, so if you have questions for either of us, you can find that easily. All right, thanks so much for watching, guys. That's it for today, and until next week, I hope you have a good one. Bye.
Bye.
As you can see, that video was shot in a different location. I actually shot that interview a week before my vacation on June 5th, but I wanted to jump in here and kind of give you the caveat of the video and all that, really just so I had a better intro into the video. But I hope that answered a lot of questions for you. I hope you have less fear or worry or questions about the financial market, interest rates, and buying a home. As always, if you got questions, hit me up. You also have Norma's contact information now, so you can hit her up. With that said, thanks so much for stopping by. I hope you enjoyed it, and until next time, bye-bye.